Good morning, everyone. Welcome back. Good morning, Cam. How are you?
Oh, good. Thanks, Chris. Refreshed. Went for an early morning ride this morning. Just magnificent. Out in the
Excellent.
mountains. Got some
Yeah,
fresh
I guess
oxygen. So
better
feeling
than all
pumped.
that. Yeah, better than all that rain we had in the last few days.
Yes. Yeah. It was good. It was good to see it break because I was thinking that rain on Sunday was, if that was going to persist for another week, I'm like, oh, we're going to have a quagmire. So managed to get a bit of mowing done on Saturday afternoon, which was awesome. So my timing has been
Fantastic.
impeccable lately. I've been working around the weather well, so
Yeah,
it's been going
excellent.
good. And
Excellent.
it was such a busy week in the markets last week. I really needed a break because when you're in front of the
Mm.
computer a lot, you really need to get out and ground yourself because the EMFs you pick up from the computers can really affect your immune system, but your nervous system. So
Mm.
it's so important just to ground and just connect in with the earth. So it was good to do that.
Fantastic. Fantastic. Well, for people, if you're just joining us for the first time, this is Trading Success with Cam Buchanan. So Cam is the founder of the International Day Trading Academy and has been a successful trader and educator now for over 20 years. So that's you can see more about Cam in episode 1. So yeah, Cam, we'll jump into what happened last week. We did talk a lot about round numbers in the Nasdaq, the S&P, and even in gold. So yeah,
Yes,
I'll let you run through how it all turned out.
yes, and guys, just remember this is general advice only. All right, we're licensed to provide general advice, and whenever we talk about performance, past performance is has no evidence of future performance. All right, so remember everything is based on past performance. What could happen in the future is subject to uncontrollable events that may happen. Right, so really important to understand that because sometimes as a trader you can get a little bit, your longer term perspectives can be in conflict. You might think that longer term, the market's going to go down, right? There's a correction in the market, but then there's moves on the day trading timeframes, on the smaller timeframes, where you're getting long moves, all right? So buying signals. So I think at the moment, with everything going on, I think it's really important to separate if you've got a longer term strategy or a longer term portfolio, being able to separate that concept from your short term trading. Okay. And as day traders, we've got to be very much short term and just watch your biases don't get in the way of your day trading opportunities. So, and also too, a lot of the information we are giving is based on the week ahead, like important support and resistance levels that may come up in the market that may give us inside information into what's likely going to happen. What are the key levels to look for trading opportunities to trade off? And that's what we exactly got this last week. Last week was a great trading week. There was particularly some of those numbers that Chris you mentioned, like 5,000 on the Nasdaq, 2,300 on the S&P 500. They were the key levels we were looking for the market to hold either above that level or get under that level. All right. So that short term, with having a short term view, you can use those key levels as areas to look for trades from. And you want to look for, like I was looking for resistance at 18,500 and looking for shorts off 18,500. And I was looking for also on the S&P 500, looking for the market to maintain under that 5,300 level. And that seemed to play out really well that week. All right. Do you get it right all the time? No. All right. But I think this is an important part of your trading process is to review based on what you thought was going to happen, reviewing at the end of the week and going, well, this is what I thought would happen and this played out. And that gives you great confidence in your ability to read the story. And you don't need to get it right 100% of the time, but because the great thing about having a certain level that you're looking for in the markets is you're using that level as a pivot. So that 18,500, it was a pivot, which means the market was either going to pivot above and hold above that price. And if it was, then we were looking for buy trades or longs. And if it couldn't hold under 18,500, we were looking for shorts off that level. Okay, so just to know that that's kind of what we were looking for, and luckily it was one of those weeks where we could take advantage of that, and there was some great opportunity. So let's have a look at the Nasdaq, shall we, Chris?
Yeah, sure.
And sort of explain where we are, what happened last week, and what could potentially happen this week. So we'll look at the Nasdaq because that's one of the most important indexes that our traders look at. And I'm going to share my screen. All right, so let's start on our daily chart. And so give you some context of where we are on the daily chart. Let's have a look at, I'm not too sure this has got all the data. This is the one I'm after. This is the chart I'm looking for. There is a little bit of mess on this chart, which I was actually I was cleaning up the wrong chart before I came, so there's a lot of little lines. Anyway, that's just my OCD looking at that. And so anyway, let's give us some reference points. And we were looking at let me try this again. So that was Monday, Easter Monday on the Nasdaq. And so the last trading day was Thursday, the 28th, and you can see you had this little inside bar, all right, happening here. So the market tested the high of that bar, and then it went down and tested the low, but it really just stayed in the range. It was a very balanced day, all right. Easter Monday, obviously people are getting back into the markets, probably a little bit slower, lighter volumes, not much going on. Also too, that was only 2 days after that horrific Baltimore bridge collapse, which happened on the 26th. So around the 26th and 27th, we didn't see initial negativity out of that. But I think we're going to see over the next couple of months, particularly in America, I think we're going to see a little bit of negativity coming out of that because that's going to be a massive issue, particularly with supply chain dramas, because I read somewhere that, so many cars come into that Baltimore port, from Europe and China and Japan. So that is a major drama, what they need to get that port cleaned up so that they can start getting, stock back into the inventory and back into the ports so that it can be distributed. So that's going to have a definite effect, on I think the US markets. And you can see we had on the Tuesday, we had this breakout of what we had. This market was in balance here. The week leading into Easter was a very low volume week, very low volatility. And we finally got some volatility on the Tuesday and the market broke down. And interesting to note, that 18,500 number that we spoke about, Chris, last week was the key point where basically the market opened and closed on that level on the Monday. Yeah. And then on the Tuesday, we opened up, we sort of spiked up above it for a little bit, but we basically traded underneath that level. And the whole week, the market could not get back up and close over that 18,500 level. So on Thursday, the market, tried to break out above it, got caught in some of these levels I had up here, which were what I was calling strong rejection areas. They were, to me, institutional areas where bigger sellers were coming into the market. And these areas were acting as major resistance. And the market could not get it back above those levels up around 18,600, 18,500, around that. And then the market sold off. And we had a very strong sell-off on Thursday morning. And also, I think that was to do with the FOMC, or the Federal Reserve. One of the speakers or one of the members of the board came out and said that they definitely not in a rush to decrease interest rates right now. So that was fairly negative on the market. So we had this big breakout candle here. So this, to me, on the daily time frames, we're starting to look a little bit corrective or bearish on the daily time frames. Now and this is why it's so important not to get so overall caught up with the larger perspective or a view, having a bias that the market's bearish and the market's got to crash. Because what happened on Friday is that we had quite a strong rally on Friday. So we had non-farm employment news, non-farm payrolls, which is a really important red flag news announcement. It can really affect the markets. And this market was looking like it wanted to go low and keep going lower. During the Asia session, we sort of broke down lower and we tested the low of Thursday. And we tested the low a couple of times on Friday, but we couldn't break below that level. And then the market just rallied. So this is why it's really important to have a short-term perspective and really focus on what's happening on those smaller time frames as day traders, and not get too caught up with the overall having too large a bias on what the market should do on a larger level, on a larger time frame. And look, really, dial in as a day trader on your smaller time frames, your 5, your 15, your 30. Watching those charts is very, very important. Okay, so that was interesting, right? So if you were hell bent on going short on Friday, then basically what we had was a short covering rally on Friday. So a lot of these shorts that came out on Thursday basically got covered on Friday. So that's kind of what played out there.
And you can just from a quick visual on that, Cam, even if you look left, and you can see that was a support level back in the middle of March as well. So as you say, if you look at the bigger time frames to get key levels, I guess, of support and resistance, and then, as you say, go into the smaller time frames to play off, the charts you're looking at.
Yeah, absolutely. You can see this market is still on the daily time frames. We're basically back into this balance, right? And the market's been in this balance zone pretty much all of March. And this is obviously going to be very key. If we break under this level, 18,000 is probably the next key level. On the larger time frame, you want to see the market go down and test 18,000 and hold under it. That's where your bigger time frame shorts are going to play out. So you can see this is the market now trading, where the markets are open, because these markets do trade 23 hours a day. So we're in the Asian market right now, Asian open, and you can see the market's going down short at the moment. So it'll be interesting to see if we can test this 18,000 level or test these prior lows and break those levels. If we can break it and hold under it, then there's going to be some bigger selling coming into the market.
Yeah.
So that's kind of what's happening on the daily time frames. One thing is interesting to note is and I'm not a very big I'm not really big on technical analysis, but if we're looking at basically trying to find like a trend line, we're kind of under the trend line a little bit, so that's something important to watch on Nasdaq, that we are under this trend line, and that can typically be a bearish sign. It's a fairly rough trend line, but as you can see, it's trend lines are very difficult to draw because they're a very technical thing. So sometimes being too technical really doesn't help you in the markets. But
I think everyone has a different opinion of a trend line. They draw them a little bit differently as well.
That's exactly right. But you can see that the market's been trending up, and now we're in this, because markets tend to go from, particularly on these larger time frames, they tend to go from trend to range to trend, right? Are we going to continue the trend up, or are we going to start a new trend down? That's kind of where we're at the moment on these larger time frames. So that's the key levels down there, is where you mentioned exactly that. All those support levels down there around 18,000 are the next level of support that we're going to see the market try to get under. If we look at the weekly timeframes, so you can see on the weekly timeframes, you can see how we're in this range. You know, we still haven't, we're not in a correction yet. We're still in this range. We did break under, we closed under the prior week. So this is last week here. So you can see last week, the volatility increased a little bit more than the prior week, but we've still got I think the volatility is quite, on the larger timeframes, the volatility is quite low, but on the smaller timeframes, the volatility has been quite high. Like the market has been moving a lot of ticks in a session. If you look at the smaller timeframes, you know, some of these moves we've seen in the US close on Thursday, we had a huge drop, you know, a huge amount of volatility. But really within the larger timeframes, there is not a lot of volatility in the market at the moment. I did note, however, the VIX, which is what they call the volatility index, did pick up a little bit last week. And also another interesting point as well was the commitment of trade, which is basically a measure of open interest of it's basically the Chicago Mercantile or the CME has to report, or big trading firms have to report to the CME about their position sizing, whether they're net long or net short. And one of our members yesterday at our Gold Coast Trading Hub mentioned that the commitment of trade for the commercial traders. So the commercial traders are the ones you want to be following on the larger timeframes, and they've gone net short on the US indexes. So they're generally the ones that are right. The non-commercials and the speculators, the smaller term traders, they're still holding their net long. So they're generally on the wrong side of the market. But once again, that's a larger time frame scenario, which is not that important for us as day traders, but it's interesting to have in the back of your mind that this is what is happening now, that the traders have gone. The bigger institutions or the commercial traders, which generally are on the right side of the market, have gone short, which is an interesting point of view. So interesting to note on this weekly time frame is, I'll just grab my ruler. That was obviously, we closed under the prior low of last week, and we're basically still in the middle of this range at the moment. Monthly time frame, you can see with the monthly time frame, you can see April is we still haven't tested the March low, and that March low is that level that we were talking about before on the daily chart, around 18,000. That 18,000 level is a really key level here to watch. So if we break 18,000, typically when these monthly levels break, what I've seen from my experience is that we tend to get quite a strong move down once we break these monthly levels. But you can see, the monthly charts have been, we've had 1, 2, 3, 4, 5 months bullish. Before that, we had 3 months kind of grinding down. That was coming into Christmas, and then pretty much, Christmas, that was coming to November. December, January, February, March. So we've pretty much been rallying pretty much since November, December up to the all-time highs. So that monthly low is a key level to look for on the Nasdaq, which is around 18,000.
So you're sort of looking then from that, as you say, larger time frame. You've got a support at 18,000, resistance at 18,500. So as a day trader, that's your parameters that you go, all right, for now, where the market's sitting, we're trading in between here, and that's your bigger picture.
Yeah, and between 18,000 and 18,500, that's 500 points, which is 500 points equates to about 2,000 ticks. So there's a lot of price movement between those levels. So, our trading philosophy is all about finding the best support and resistance. And you don't need to trade a lot as a trader. If you can get the best levels of support and resistance and trade off those support and resistance levels, you can get some very strong moves off those levels. So, you don't need to over trade as a trader. As we know, it can cause lots of emotional issues over trading, being in front of the computer too much, not great health-wise as well. So it's having that balance. So if you can, the reason why we have these podcasts is to help you map out where there's going to be good opportunities to look for on these larger time frames, and then you can, use your skills using your smaller time frames and the way you trade a smaller chart and what you use to help you, find those support and resistance on those smaller time frames. Then you can really zone in and target your particular trades.
Yeah.
So that's that on the Nasdaq. S&P is doing fairly similar things. The S&P 500. So S&P, you can see the trend line looks a little bit tidier here than the Nasdaq. And once again, we've kind of closed almost near the trend line. We couldn't get back into that trend line on Friday. But you can see S&P 500 is doing very similar things. So we had Thursday bar here was very strong sell-off. And we're basically, 1, 2, 3 bars down on the daily chart. And that can be a fairly bearish sign on the larger time frames. So we're so that's the daily chart. The monthly chart looks very, very similar. We're still breaking highs. We've made all-time highs in April, but we still got a fair amount of room. So you're looking around about that 5,125 is the monthly low on the March low. So that'd be a key level. So yeah, this market, still looks like it's still rallying. So if we do have a short, sharp, sudden sell-off in the markets, you'd be wanting to look for this area down here, that 5,150 to 5,100 is a really key level of support. You can see we've got this imbalance zone here from around about 5,080 up to around 5,150. That still hasn't been filled as well, so that can be a bit of a target. So we finally filled this imbalance zone last week, which was still exposed. So we've filled that area. So yeah, maybe this week there's not a lot of news, red flag news in the markets, but I think maybe some more updates around the Baltimore Bridge collapse. And as we know, there's still lots of tensions, geopolitical tensions that could really drive prices as well. And that's what we've seen in the gold market and the silver market. We saw a big rally last week in gold and silver, which we'll quickly go on and show you that now. I'll quickly grab the gold chart. So we look from the gold daily perspective. So this is the current day. So you can see, the market has, I'm not too sure what's that, the 8th, yes. So, the market's quite bullish already. We did our last podcast we did was Monday, was this day. And we said, the key levels to look at for gold were going to be that 2,300 could easily be tested. We'd broken 2,200 and we were looking for the market to hold above 2,200. And you can see last week, the market has not, it tested the low on Thursday, but Friday, pretty much, closed within the range. And then today we're continuing higher prices. So gold has really, has really been lively. And that's the way gold operates. Gold goes through these periods of just real slowdowns, and then when it breaks out, it really goes. So we basically had, 1, 2, 3, 4, 5, 6, 7, 8, 9 days in a row up on the gold market. So there was some really good opportunity that we highlighted last week about the gold market. Silver as well. Silver's been a bit of a sleeping dormant market. It's still away from, quite a long way away from its all-time highs as well, up around, we've almost hit, I think, all-time highs. I think all-time highs are back up there, around 27.
27, yeah, I think that's what we
sure
mentioned last week.
I'm not too sure if that is the all-time high, but we've gone back up and we've tested that all-time high today. So, or that most recent high anyway. So, silver pretty much followed gold last week and broke out. And that was what we were mentioning. We were mentioning if the market could get back above 25 and then looking to trade up to 26. And it just smashed through 26. And then we smashed through 27. And now we're kind of, it looks like we're trading around that 27 mark at the moment. And I think that's just a pure result of what's happening geopolitically. And I've heard China is buying a lot of gold as well. The Federal Reserve of China, the Fed banks over there are buying up a lot as well. So that's kind of a breakdown, a review of what happened last week and what could happen this week. I don't know what's going to happen with these commodities. I haven't really spent a lot of time analysing what could happen in the commodities, but I just basically wanted to review what we talked about last week.
Yeah, no, fantastic.
And just to finish off too, there was a comment in one of the YouTubes about, you guys are all great at Harry hindsight sort of stuff. But how do you actually make this work, and how do you actually, how do you trade it to be a benefit? Well, I said last week was a very good week in the markets, and because of the way I framed the market up, we did have a very good week. So, I just want to show you, if you look at these results here, this is just from 1 week's of trading. That's in US dollars, right? That's just trading the Nasdaq market alone. I'm not showing you what I did on silver and the gold market, but just on the Nasdaq alone. And remember, past performance is no indication of future performance. And this is all general advice, but this is basically the net result from trading the Nasdaq last week, and trading particularly off that 18,500 level. That was a really key level that I was looking for. But I was using that sort of downward sort of trend in the market to fuel a lot of my trades. So that's $3,396 US dollars in a week's worth of trading. And you can see here, I didn't win every trade. That's an 81% win rate. There was 36 winning trades, 8 losing trades. And you can see also in terms of the amount of, I did trade out of the 44 trades. I did have 13 trades which were longs, all right, or buying trades. But the majority of my trades last week were short trades, 31 trades, or 80% of my trades. I think that's about right. Yeah, around about 75% of my trades, or under 70%, actually, around 70% were short trades. And that's because I mapped the markets out. I thought the market was going to likely be trading short, and they were going to give me my best opportunities. So I just wanted to show some of the skeptics out there that, not only do we review the markets, but we also, we try and trade these markets as well, and try to get great performance in terms of financial gain out of this analysis that we're doing. All right, and I totally get people out there are skeptical about, all right, it's so well and good to trade all this stuff in hindsight, but basically what we're doing in these podcasts is giving you a week ahead outlook. We're looking at key support and resistance levels that you want to look for trade opportunities. And how you trade is up to you, right? You've got to take full responsibility for how you trade. But if you can map out the trades and find those key support and resistance levels, and what we call confluence levels, powerful levels, if you know how to do that, and you can mark that up and carry that over onto your smaller time frames, then when the market gets to those time frames, then you can start to get really zero in and look for your trade signal on your smaller time frame charts. So really, that's what we're trying to do here, is to give you a good understanding of what could potentially be happening in the week ahead, what to look for, and how to navigate the market in a safe way, and try to take advantage of the smaller time frames, with an idea of what the larger charts are telling us as well. Okay, so that's about it, Chris. I know it was a long one today, but I wanted to, there was a lot of good information that I need to share, and there's a lot going on in the world. You can see, just looking at the silver chart, if you just look at the volume, how much more volume came into the silver market last week compared to what we've seen. Like, this indicator down here shows you the daily volumes. So big compared to what we've seen. Gold as well. Gold as well. We started to see some big volumes. You'd see gold really stepped up here. When we came out of this, the market was coming out of this kind of range. A bit of a consolidation. And we came out of that, and look at the volume came in. When we broke that trend line, look at the market. It's just gone crazy for about 9 days in a row. So, and then we've broken out again to the upside. So this market is, it hit its 2,300 mark, and now we're, that's going to be the next sort of resistance area now. Will the market continue to hold above 2,300? If not, then look for maybe short opportunities under 2,300. Right? But that's where your small charts come into play, right? You go into your smaller charts and really zone in around those key round numbers. And at the moment we're holding above that level, but what happens in the week, we'll see what happens. There may be some selling, short-term selling, but I think with all this geopolitical stuff going on, this is, the markets are telling you what's coming up, right? The smart money is going into basically safe havens. And what does that tell you? Well, there could be something more going on that we don't know about. You have to be, on the phone with, the big world leaders to know exactly what's going on. But the charts can tell you a lot about what's building.
All the big money's moving somewhere.
Follow the capital flows, right? That Martin Armstrong, if you studied some of his work, I totally recommend Martin Armstrong. He's very switched on, and he talks about following the capital flows, and as a longer term investor, that's what you want to be looking for. Getting you focus on that. But anyway, that's it for this week, guys. Chris, is there anything else we need to cover off on?
No, I think that's it. We've covered a lot of back on looking back on what happened last week, and as you say, it is easy to look at charts and trade off hindsight, but as you mentioned, we're not telling you what to buy or what to sell. It's these are the key levels to look at, giving you 20 years of experience. This is where we think you should be looking. And then you apply your own trading strategy, within that, if you agree. So no,
That's
fantastic,
right.
Great information, Cam, and thanks again for a very informative week.
Excellent, thanks, Chris. Stay
worries.
safe, guys, and we'll catch you next week.
Excellent, thanks, Cam.
Thanks, Chris. Bye, guys.